Doug Segulia. He is an entrepreneur. He's an architect. He's got not a lot. He's got things to do. He's been on the show. His big first win was a lakeside property outside New York City that he bought cheap, renovated over 2.5 years. Typical architect move, right? My wife would
really
love
perfect.
to do something like that. Yeah. And turned it into a high-performing Airbnb. But despite the strong income, property became a drain on his time and lifestyle as his architecture firm grew. The time-intensive piece as an entrepreneur was a lot for him, and then he started facing some regulatory headwinds in New York with the Airbnb market. Then he just got kind of burned out with DIY investing. Let's hit on this idea of folks that come into real estate and jump into Airbnb and, kind of like burn their hand on the stove. Is that something you're seeing more and more these days?
It was something I was seeing a lot more of a couple years ago, where people were coming to me with their Airbnbs and saying, even just Jacksonville locals, of, hey, I had this as an Airbnb. It's not doing what I need it to do. Can I turn it into long-term rentals instead? And we say, yeah, bring it to me. But we look at the numbers too. I think the biggest thing in it is it's a lot more than people think that go into it.
A lot more work.
A lot more work that goes into it. And then even on the financial side, there's just a lot more under the hood than I think a lot of people know. And then there's not really at least even like when we played with Airbnbs, we learned a lot along the way. It's hard to have a like Airbnb for dummies. I'm sure that exists, but there's always, you're just finding out new stuff along the way.
Yeah.
So I think even from just an investment strategy point of going from short-term to long-term rental, that's going to change. I see it a lot less now of people bringing them, because I think people have just stopped investing in them as much. Yeah. And I think even just the popularity of Airbnbs has faded, in a personal opinion. I think it was a really, really hot thing for a while.
Yeah.
And now the pricing has kind of catered where it's more attractive as a renter to sometimes stay in a hotel, unless there's a very specific, like, I'm in the middle of a mountain, I'm in a tree house. If there's something super flashy, then it's attractive, but it's kind of, I think, lost its luster a little bit. So it's really now harder to predict who your guests are going to be as the owner.
Yeah. I chalk it up. So I don't have any operational experience in Airbnbs, right? I hear that over and over again. Like, the operational thing is harder. You might have that figured out. For me, what freaks me out at Airbnbs is it's investing in trends. Right.
Yeah.
Right. Like we had that show where basically, like, man, I am an elder millennial. I am the generation that like Airbnb was made for originally. And it was like, I remember I keep telling people, because now I'm super hot on renting cars on Turo these days.
Okay. Yeah.
And I keep telling people, I'm like, dude, renting cars on Turo right now, it's like 2012 Airbnb.
Yeah.
Because when Airbnb first came out, you got like a better deal.
You did.
A better location for traveling. It was really competitive against hotels, and it really had this like community aspect and all this type of stuff.
Made a lot of sense.
Nowadays, it's like, because regulation has caught up to it, right? It's the pricing and the value that you get per thing, right? Like, I'll still look at an Airbnb if I'm traveling with like a big group of people.
That's it, yeah.
And we're splitting in it. But like when I'm traveling solo, I'm generally going hotel, just because it's caught up to it, and there's just like less stuff, that I have to worry about, and it just makes things easy, right?
Yeah.
And it just felt like this big trend that, as it aged, it normalized, to use words that we use on the show often, it like normalized the cost, the value, benefit. And for, I think, people that are part of our community or part of the show that are thinking about investing for the long term and, really being able to build their future around something, investing in a trend, whether it's Airbnb or it's Pad Split or it's crypto or whatever, right? Like, these things that just haven't really aged out just seem like it has an extra bit of undefined risk. That seems like it's a thing that bit Doug.
Yeah, I think you nailed it. Yep, you crushed it.
We'll go there. Yeah. Well, so Doug, when he saw it, he was listening to the show, right? He was obviously like getting a show that delivered more than content, is what he said. Doug had been listening for years. The education, transparency, and stories from other investors gave him conviction to move forward. That allowed him to trust the process. That allowed him to, he saw the value of this like passive growth versus an active hustle as he realized that what he wanted to do is put his active hustle into his business,
Yeah.
right? Which is something that I can very much relate to. And then of course he loved the 1031 exchange readiness.
Yeah.
That's what made him come over and learn that one.
And I
Uh,
think we see that a lot with even versus like Airbnb or not, people transitioning from active into passive. And that's something that we're able to offer. But a handful of people get into the game when they're active, and that's their thing, and they have the time and they have the resources, and that's what they're able to pour it into, and it works. And then it works until you have a highly successful architecture business that's popping off or whatever it is, your next venture that you have. So being able to transition that of, okay, I love this product, it makes a lot of sense. I just can't be point man for it anymore. Who can I trust to do it?
mhm,
Who can do it better than I could? I think is
mhm.
a really tough question to ask and a really tough answer to find. But who can do it not even as well as I could, but better than I could?